What's up, everybody? This is Dante Cook, head of Swan Business. We're doing a little bit of a different format today for the Bitcoin Daily Show, and we're walking through why CBDCs are not a tool for financial freedom. And I wanted to go for more of a thematic topic today because I was inspired by this video by a guy named SharkyBit, who I'd never heard of before, but he created this funny and awesome video about CBDCs. And so I wanted to go through a topic today of why CBDCs are not a tool for financial freedom, but financial slavery versus Bitcoin. And let's actually take a look at this guy's video. It's really funny. Got to give him a lot of credit. Let's take a listen.
Are you or a loved one suffering after buying Bitcoin? Are you fed up with the huge returns on investment? Fed up with all the financial sovereignty and freedom? Perhaps you're annoyed with Bitcoin's level playing field and predictability, or maybe you're just disheartened with its strictly limited supply and constant growth of your purchasing power. Whatever it might be, don't worry. Central bankers have got a plan for you. Introducing Central Bank Digital Currencies, or CBDCs. It's just like Bitcoin, but without all the freedom, revolution, and financial gain. The idea is simple. Why have control over your own money and life using Bitcoin when you can let an entrenched communist central bank oligarchy control it for you? So what inspired us to create CBDCs? The short answer is, you did. When we look.
All right, check out the rest of the video on your own time, but I thought it was pretty funny. So I wanted to go down some rabbit holes. Sam Callahan from our team, senior research analyst, has already done some work on CBDCs, but I wanted to go into this topic for us today because it was topical for me. So let's go into this. Like CBDCs, like everyone thinks that they're going to be similar to our system today. Not really. Sort of like cash, but not at all. You know, CBDCs have been implemented across the world, specifically and most robustly in China, where they have different forms of control around things that you can buy, things that you can't buy. If you're speeding, for example, they may reduce the amount of money in your bank account. And so it's very much like cash in the fact that it's digital, and we're not carrying physical cash anymore unless you're Senator Menendez, like we talked about yesterday, who is being charged for bribery with $500,000 in cash and 13 gold bars and a Mercedes-Benz. But for the rest of us, we're using cards, and it's likely digital. The major difference is that this technology will be built upon blockchain technology, and it would in sense make this money programmable. The other major difference is that money today typically is a liability through banks. When you have a deposit, it's a liability of the bank, or debt that's owned by another country, it's a liability of the US government. So this would be money without liabilities per se, but central banks would be able to send money directly to the end consumer, which is you and me, which is different than how our system works today. But I wanted to dive into some ways of what's told to us about CBDCs that we all know to not be true. And if you don't know, check out this video. So examples of CBDCs today, like cash, just with added surveillance. They have a social credit system. So I call this programmable prohibition. So the ability to limit what things you can buy, what things you can't buy, things you can see and view and do. Like in China, for example, you won't be able to get on a specific flight if they think you're a flight risk. If you've looked at different things on Weibo or different commerce platforms that they have over there, they can actually limit the things that you can do and not do. And, you know, one thing that they've done is they've implemented this full circle with this surveillance system that they call Skynet. And so, no, we're not talking about Arnold here. Not Arnold Schwarzenegger, but this is actually Skynet in real life, where if you do something wrong on camera, if you're caught doing suspicious behavior, they might actually take away money or freeze or seize your bank account. And this would allow things like, what happened a few years ago in Canada to be more widespread, where Justin Trudeau and the Canadian Prime Minister and the Parliament were able to seize and freeze bank accounts of truckers who were protesting, who then tried to go around it using GoFundMes and then also Bitcoin. And it actually proved in just modern context that through digital means, people can be shut down and have their access to money limited. And this would be much more simple with a CBDC versus it is in a current cash system. And so there are 113 countries actively developing or working on CBDCs. And there's another small breakdown here that 3 have actually launched, 36 are in pilot, 30 are in development, 44 in a research phase, 17 are inactive, and 2 have figured out what we all know to be true. This probably won't work, but the government's still going to try nonetheless. And so there's a couple different places you could look. I have them kind of listed here. The Human Rights Foundation has a CBDC tracker on their website. It's pretty cool. It's interactive. You can click on the globe and look at the people affected and where it's at in its infancy or its maturity. Really good tool to check out if you're interested in CBDCs. But there's a difference between what we're being told and what we're being sold in the real CBDC future. If you've been following this channel or Bitcoiners on Twitter for any amount of time. And it's being sold as a tool for financial inclusion. They say that there's going to be reduced risk and volatility because, again, we're removing counterparty risk with the banks and all of these other intermediaries. And they say that there's going to be improved efficiency and settlement times with APIs and automation. But if you know the government, they can't even build a website, even with a no-code website builder out there today. You think that they're going to be able to build their own technology systems that they're going to be able to integrate and talk across borders in real time and settle. Not sure that that's going to happen. But the real CBDC future that they're trying to implement when they're talking about these benefits on the left is surveillance and censorship tokens, the ability to grant access to things digitally based upon rules and things that they program. They also will be able to manipulate markets directly. And so what do I mean by this? So when COVID happened, if you were in the United States or you were in an economy with the US dollars, there might have been helicopter money that was just magically printed into the system. And that impacted the economy very fast in an original way that we hadn't really seen because it stimulated money straight from the government to the people. And it didn't flow through the banks and through lending and through economic activity that comes as a result of more liquidity. It was a direct injection. And that had many perverse impacts on our financial system and largely accounts for the inflation that we see today. And they also talk about how there's going to need to be less trust. But in this world, we're going to have more AML and KYC, more checks and balances, more regulation, more red tape, in order for you to be able to access these systems that are going to be tracking you. So there's not going to be less trust and less cost, but more trust and more cost. So that's kind of the real future. The European Central Bank, although they tout it as financial inclusion technology, they say a digital euro should also benefit people who so far have limited access to digital payments and thereby support financial inclusion. Okay. The Federal Reserve says that a CBDC may be one part of a broader solution to the challenge of achieving ubiquitous account access. I don't buy it. But they did say here in emergencies, CBDC may offer a mechanism for the swift and direct transfer of funds, providing rapid relief to those most in need. Okay, we already have a case study with that, but let's see how that goes. Bank of England. A CBDC may also help to boost financial inclusion in an increasingly digital world. All right. IMF, a digital currency could satisfy public policy goals such as financial inclusion and security and consumer protection. Okay. The BIS, the Bank of International Settlements. I usually call them the Bank of BS. There's not a lot there that's actually valid and true about what they say or do. And they're kind of this weird shadow, quasi-governmental, public-private organization. We don't need to go there. But they talk about a unified ledger and that there's going to be automated and integrated networks of networks. And it's going to be less risks because there's going to be a less of a need on the financial banking system. And they actually call CBDCs the blueprint for the future monetary system, improving the old and enabling the new. I'm not buying it. I'm not buying the things that were being sold. And, you know, just in a practical sense, these are all great ideas on paper, but they're now actually just writing case studies about failed CBDC launches. The Naira is one great example in Nigeria where they tried to roll out the e-Naira, and it pretty much flopped in a matter of months. And people went to stable coins and other cryptocurrencies because people generally don't trust the government.
Tiberius, this is gonna sound completely horrible, but I don't fully trust you.
It's pretty well known. People don't trust the government, and public trust in the government is near, or actually now, since this last survey, at all-time lows for a lot of different reasons that we don't need to get into. And according to the FDIC's own survey about the main reasons why the unbanked or unbanked, they actually don't get solved by CBDCs. Forgive some of my typos here. But, you know, one of the main things is say people don't have the money to meet the minimum balance requirements. One of the largest ones is people just don't trust banks. Avoiding a bank gives them more privacy. Who would think? Who would think that sort of thing? And then there's other reasons that people didn't select, which, you know, again, they don't want to tell the feds or the ops what's going on in real life. And so CBDCs, because of the amount of integration, the amount of intermediaries that are going to be needed to implement the surveillance and the APIs and the interconnectivity between the systems to allow them to settle, it's actually going to need more trust. There's going to be more parties involved than there already are in the current system. And this doesn't decrease costs, but increase costs. And if you go back to the original white paper, you know, Satoshi Nakamoto had this to say: the root problem with conventional currency is all the trust that's required to make it work. The central bank must be trusted not to debase the currency, but the history of fiat currencies is full of breaches of that trust. Banks must be trusted to hold our money and to transfer it electronically, but they lend it out in waves of credit bubbles with barely a fraction in reserve. We have to trust them with our privacy. Trust them not to let identity thieves drain our accounts. This is one of the main central theses behind Bitcoin and why it was created in the first place, to remove trust from intermediaries, from third parties. And that's why it's peer-to-peer, party-to-party, person-to-person, address-to-address, without hopping through different nodes in order to be transacted or settled. And even though they say that this is going to allow for the ability to transact more freely, the European Central Bank, the ECB, said full anonymity is not considered a viable option from a public policy perspective. It would raise concerns about the digital euro potentially being used for illicit purposes, money laundering, financing of terrorism. Where have we heard that before? The Federal Reserve said that a general purpose CBDC would generate data about users' financial transactions in the same ways that commercial bank and non-bank money generates such data today. It says intermediaries would address privacy concerns by leveraging existing tools. So again, they say it would remove things. It's not. My own view is that CBDCs without identity, purely token-based, will not fly. So they're going to need some form of identification, government IDs, biometrics, in order to allow you to use your money and spend your money. So if you got frustrated every time that the machine was down at the grocery store, now imagine how frustrated you're going to be when CBDCs roll out. And the person who said this was Augustine Carsons. And I'm a man that run towards people when they need help. And this suit is crying for help right now. That button is screaming and holding on for dear life. It's hodling right now. And it may need to sell sometime soon, but I'm running for help. And I'm not taking a lot of advice from people whose buttons look like this, just to be completely honest. So what we don't need a CBDC. We need a new money. We need Bitcoin. We need the future reserve currency of the world. Bitcoin is digital money. It's peer-to-peer. It's fixed amount, over time, it's unchangeable. Can't be forged. Transferred instantly without banks or governments. It's borderless. It's portable. It's non-confiscatable. You can transact without leaking your identity. It's usable 24/7, 365, and it's permissionless. This is the future money that people want. These are the arrows of progress that were started way back when the internet was created. And Bitcoin will save us and protect us through its performance. It's been the best performing asset in the world 10 out of the last 13 years. This year, it looks like it's going to be 11 out of the last 14 years. So Bitcoin continues to protect our savings through its performance, through demand outpacing supply, which is fixed at 21 million. And it's globally accessible, sort of like the protocols of empowerment that we use today called the internet. So it's the money protocol of the internet. So saying that you want a CBDC to be global, right now it's siloed from country to country, from technology to technology, from implementation to implementation. But Bitcoin has already been implemented for us to leverage globally. So not sure why we wouldn't leverage that. So my final message for you today, just based upon that commercial, don't CBDC. It's bad for you. Bitcoin, it's good for you. It's the difference between financial slavery and financial freedom. And with that, we're signing off for today. This is Dante Cook with Swan.com. Happy stacking.